The Iran peace deal is collapsing in real time. Inflation is reaccelerating, and consumer sentiment just hit its lowest level since 1952. And with midterms fast approaching and dollar dominance hanging in the balance, this administration is running out of runway and running out of options. Enter the ARMA Act. Congress just introduced what might be the most desperate and brilliant move in American monetary history, a plan to revalue the nation's gold reserves and use the giant gains to buy 1 million Bitcoin. And nobody in the market is paying attention as Bitcoin sits in the deepest stretch of apathy it's seen in years. Could this be the Hail Mary move to save the American empire? This is Truth Block. I'm Hurley. Let's mine truth. Last Wednesday on Bitcoin Pizza Day, Congressman Nick Begich introduced the American Reserve Modernization Act, or ARMA. This is a bill with 21 co-sponsors, bipartisan support with both Republican and Democrat leads that would make Bitcoin a Tier 1 strategic reserve asset of the United States. It codifies Trump's executive order from last year into permanent law that can't be undone by the next president. Fox Business covered the bill in an exclusive yesterday.
The administration is pushing for global crypto dominance in the U.S. Darren Botello is with us. He's on Capitol Hill, actually. In plain English, how are they going to do it, Darren?
Hi, good morning, Stuart. So the president is asking the Fed to review allowing crypto and fintech firms to store their money in the central bank. And this comes after Kraken got access to the central bank back in March. So they were the first. Now other banks want the same kind of access. But in Washington, as you know, an executive order is only as good as the president who's in the White House. The next person that takes over, they could completely change that. That's why in a Fox Business exclusive, Congressman Nick Begich is introducing a bill, he says, to lock in Trump's plan and officially establish a strategic Bitcoin reserve. Begich tells Fox Business that this is basically the new Fort Knox.
In order to maintain the sovereignty of the U.S. dollar and the strength of the U.S. dollar, you've got to have a strong reserve policy. That's why central banks around the world for so many years, thousands of years in fact, have held reserves on their balance sheet. We need to recognize that digital assets are the 21st century equivalent of those historical gold reserves.
So Begich wants the government to stockpile 5% of all Bitcoin, which is equivalent to how much of the world's gold the U.S. stores and reserves. And he already found a way to fund it without taxpayers. The Treasury is currently sucking up crypto assets tied to Iran through Operation Economic Fury. Begich's plan, seize the Ayatollah's crypto and drop it straight into the U.S. balance sheet. But he warns the GOP cannot afford to drag its feet. Conservatives have a tight 6-month window to pass this bill and lock that into law, while Republicans still control both houses of Congress. So, of course, as we know, the clock is ticking with the midterms coming up in November. Stuart?
Oh, yes. Never forget the midterms. They're coming close. Darren, thank you.
Begich calls it the new Fort Knox. And the Fox report covered the surface, but the real story is the funding mechanism, because it's quietly one of the most clever pieces of financial engineering Washington has produced in decades. The United States government holds 8,133 metric tons of gold, more than any other nation on Earth. That gold is currently carried on the federal books at just over $42 per ounce. That price was set in 1973 and has never been updated. With gold today trading at around $4,500 per ounce, that's a 107x gap between the accounting fiction and reality. The ARMA Act closes that gap. The idea is you revalue the gold certificates to market price, and you unlock over $1 trillion in paper gains. No new money printed, no taxes raised, and not a cent added to the deficit. And then you take those gains and you buy 200,000 Bitcoin a year for 5 years, to 1 million coins total. Lock it in a vault for 20 years, with military-grade custody standards written directly into the bill. We're talking multi-sig, air-gapped, quantum-resistant. This isn't a wish list. This is legislation. I just love how Eric Yakes framed it on X. Bitcoin is valuable because its best competitor is 1 million years old and doesn't work on the internet. And that ancient competitor is exactly what ARMA is using to fund the transition. Now here's the part that turns this from interesting policy into something much bigger. Because to understand why this bill exists right now, you have to look at what's happening outside our borders. The Strait of Hormuz has been effectively closed since February 28th. The Petrodollar system, the agreement that oil trades in dollars enforced for 50 years, is under more structural stress than at any point since Nixon. Trump posted on Truth Social this week, mandatorily requesting that every country involved in the Iran negotiations immediately sign the Abraham Accords. Sign or it shows bad intention. That was his language. And the peace deal is collapsing in real time. Iran directly rejected Trump's claim that Hormuz would reopen, saying it's far from the truth, and that the strait will remain under Iranian management. Then two sources close to Trump's negotiation team told the Hormuz letter that Trump is now completely backing away from the deal under pressure from Israel and domestic allies. He posted a picture of a Mark 84 bomb with his famous line written on it, "Thank you for your attention to this matter." So the picture right now is an administration scrambling to hold together a world order that is visibly slipping. Dollar weaponization on full display for every sovereign government watching. Foreign central banks seeing in real time what dollar dependency looks like when it's tested. And trust, once broken, doesn't tend to come back. And when you look at the ARMA bill through this lens, it starts to look like an empire repositioning for what comes after the petrodollar. And that's exactly why I want to talk to you about the Bitcoin way. Because understanding what's happening to the monetary system is only half of it. The other half is making sure your Bitcoin is actually yours. The Bitcoin way will sit with you, walk through your entire custody setup, and help you get it right. Whether you're just getting started with self-custody, or you've been stacking for years and want a second set of eyes. Everything we just laid out, the geopolitical fractures, the gold to Bitcoin bridge, Congress positioning before anyone else, it makes self-custody more important, not less. Schedule your free 30-minute consultation at thebitcoinway.com/Hurley. Okay, so the most significant Bitcoin reserve legislation in history just dropped with bipartisan support. $1 trillion funding mechanism and a geopolitical backdrop that makes it strategically urgent. And nobody is paying attention. The question is why? James Lavish laid it out this week on the Bitcoin Macro podcast.
Your typical consumer is super frustrated right now because inflation's not 3%.
No.
Right?
It's a slap in the face. Yeah.
And all the houses are super expensive. So when you talk to young kids, I don't know if you have, I have kids who are in their 20s and friends of that. And man, the despair on their faces with trying to get a job, with AI coming out and just eating up middle manager and some of the low, the lower entry jobs for data accumulation, that stuff, and simple analysis. But, they're scared, really scared that they're never going to be able to own a home. They're never going to be able to catch up. The boomers have all the money. The government is broken. It's just a bunch of fraud. They don't trust anybody. And this is literally the typical conversation with a 20-year-old. They're like, I need to find a way to make money fast. How can I do that? Well, you can there were more money was spent on lottery tickets last year in the United States than books, TV shows, or movies, and music. All together, they spent more money on lottery tickets. People did, not the young people, but people.
Yeah.
So
just regular
why is
citizens.
That? Why is that? Because
they need hope.
They're desperate. They just want to make money fast. So that's why you're seeing Polymarket and Kalshi just explode in revenue. Like they're all betting on sports and politics and anything. I got to have a quick win.
When your purchasing power bleeds out year after year, when housing continues to get further out of reach, when AI is threatening entry-level jobs, when every institution feels broken, people don't have the bandwidth to notice that Congress just introduced a bill to buy 1 million Bitcoin. They're too busy trying to survive. And the numbers are staggering. Over the last 6 years, the S&P 500 has risen 130%. Over that same period, consumer sentiment has collapsed 55% to its lowest level since the data began in 1952. So stocks are at all-time highs. Meanwhile, everyday people have never felt worse. That's not a healthy economy. That's two economies. One for the people closest to the money printer, and one for everyone else. And Bitcoin is caught right in the middle of it. James Check published a piece over the weekend called Peak Apathy, and the picture he paints is exactly what it sounds like. Nobody's buying, nobody's selling, nobody's doing anything. The market has flatlined into the tightest trading range it's seen in years. Volatility has collapsed, and the only people posting with any confidence on X right now are bears. Mark Cuban just announced he sold most of his Bitcoin and told the world it's lost the plot. And Checkmate's conclusion is the part that matters. These are the exact conditions from both an on-chain and a sentiment perspective that show up in very late-stage bear markets and early bull markets. Every Bitcoin bear market to date has ended, and it almost always ends when everyone still thinks it will continue indefinitely. Now layer the macro on top of all of this. Kevin Warsh was sworn in as the new Fed chair 3 days ago, and markets are still split on whether he's going to cut or hike interest rates. Fed futures are pricing a coin flip chance of a hike by early next year. James Lavish wrote a piece in his Informationist newsletter this week called What If the Fed Raises Rates? And he walked through all three options: hike, hold, or cut. The US has $39 trillion in debt, and the interest alone is eating over $1 trillion a year, more than the country spends on defense. The debt is so big now that it doesn't matter which lever Warsh pulls. Every door leads to the same room. The Fed ends up printing money to keep the system standing. And I think the ARMA bill is a response to that reality. So if the fiscal math is this broken, if the petrodollar is fracturing, if the system is forcing debasement no matter who sits in the chair, where does that lead? Luke Groman sat down with Marty Bent on TFDC last week and walked it all the way to the end.
I think it's start with gold. I think it's started. I think it's accelerating. Obviously, gold's higher than treasuries and global FX reserves as we speak. That surpassed that last year. I think it's going to continue simply because there's just trust is breaking down. And if you don't hold it, you don't own it. And the repeated weaponization of the dollar and treasuries and FX reserves, et cetera. So I think it'll start with gold. And I think you'll see, trade net settle in gold. I think China has that framework completely set up. It continues to boggle my mind that it's like hiding in plain sight. There's a offshore yuan clearing bank in every single major gold hub: London, Switzerland, Singapore, UAE, Hong Kong, and of course in Shanghai. Why? Well, because if China's paying, more with yuan, particularly in commodities, there's going to be commodity producers ending up with some excess yuan, and they're going to need to do something with it other than buy Chinese goods with it, solar panels and batteries and BYD, et cetera. And they're recycling into gold. You can see it clear as day. If you look at Switzerland's gold exports to Saudi Arabia, it's an astonishing chart, right? So there's an offshore yuan clearing bank in Switzerland, and Swiss gold exports to China, they're like this over the last 4 years since we sanctioned Russian FX reserves. Which is interesting because I had two different people that don't know each other, that are longtime veterans in the oil market, say to me, and I quote, the Saudis were horrified, quote, horrified by the U.S. sanctions of Russian FX reserve. And so now it looks like you've got Saudi net settling some portion of their oil sales in gold. That's just a fact. If you look at the trade flows, if Saudi purchases of gold from, say Swiss exports of gold from Switzerland to Saudi are like that, some portion of Saudi's oil exports are getting settled in gold. Why? Well, they're either converting dollars or yuan. It doesn't really matter. It's which Chuck E. Cheese token you use to buy the gold. Doesn't really matter. But my point is the Chinese have facilitated to make it very easy to do that. And so that to me is the roadmap. I think that's going to continue. I think the Chinese are going to continue to do that. I think others in Asia will do that. And I think what we're seeing in if you call up a chart of, the 2-year Japanese, government bond yield against gold over 5 years, like they're the same chart. Japanese people are very monetarily sophisticated. They're smart people. Like they know where this is going. They did the same math Kyle Bass did on Japan 15 years ago. Like once it gets to a certain number, they're screwed. There's no way out. So what do you buy when you buy gold? So now Bitcoin, I think, is ultimately, I think, going to serve that role as starting with sort of the people, if you will, rather than sort of the officialdom. But in the short run, it trades as sort of high beta tech. And if rates are going up on high beta tech, not good. Rates are going up on high, on Bitcoin is not good for now. Now, ultimately, it's going to be really, really good because there's nothing more bullish for a neutral reserve asset than sovereign insolvency.
There's nothing more bullish for a neutral reserve asset than sovereign insolvency. And remember, Groman isn't a conviction-led Bitcoiner. He sold most of his Bitcoin late last year. He's just a macro analyst who spent his career studying sovereign debt, trade flows, and central bank reserves. And when he follows incentives all the way through, he arrives at gold first as the institutional play, then Bitcoin from the ground up. And notice what the ARMA bill does. It follows the exact same logic. Revalue the gold to buy the Bitcoin. The legislation and the macro thesis arrived at the same conclusion independently. Gold is the bridge, and Bitcoin is the destination. Okay, before I bring this all together, I want to let you know that we're building something really exciting at Simply Bitcoin that you won't want to miss. Scan the QR code below or visit news.simplybitcoin.com/launch to learn more and be one of the first to see what's coming. Stephen Lubka wrote something this week that I keep coming back to. He said our current society is not a stable destination. It's a transitional zone, an uneasy bridge between the old world and the next one. At this point, standing still is not an option. We don't know if the ARMA bill passes. We don't know if this administration sees the gold to Bitcoin bridge the way we do. But the incentives point here. The math points here. The game theory points here. And now the legislation exists. Peak apathy and maybe peak convergence. And almost nobody is watching. That's not a problem. That's a signal. All right, now I want to hear from you. Did you even hear about the ARMA bill before this episode? How is this not the biggest story in Bitcoin right now? Are you watching the geopolitics, or are you still focused on the short-term price chart? And if the gold to Bitcoin bridge is the play, what does that mean for your timeline? Drop your thoughts in the comments below. Hit the like button if this one clicked for you. Share it with someone who thinks Bitcoin has lost the plot. And subscribe to Simply Bitcoin so you don't miss what comes next. Thanks for watching. I'll catch you on Thursday.